Welcome to the Great Canadian Comeback, where we break down the stories, trends, and shifts happening across Canada and the moves people are making to stay ahead of what's coming next. Welcome to another episode of the Great Canadian Comeback. And in today's episode, we're going to break down two deals. So I'm in real estate out here in the Vancouver area. And, the theme of the podcast is all about the Great Canadian Comeback. So we're going to talk about two deals that we just did and why things are looking quite optimistic. Definitely on the real estate side of things, if we're looking at stats alone, the June stats came out just about a week ago for Greater Vancouver and the Fraser Valley. Greater Vancouver has seen a 10% increase in activity, so it looks exciting. Sales activity has increased, and things look like a more balanced market. So the price reductions aren't as heavy as they were for the past basically 3 years. We've seen a significant slide in prices, about I'd say almost 10% per year. Certain products such as like condos or townhouses were hit a little bit harder than detached homes. But with that being said, there has been quite a bit of a slide in terms of pricing, and the stats now that they just came out is showing that the market is looking a lot better, looking a lot healthier. That's definitely on the Greater Vancouver side. The Fraser Valley is lagging a little bit behind. It isn't showing as well as a recovery as Greater Vancouver. However, normally what happens is Fraser Valley does follow what happens in Greater Vancouver. So we might just see like a 1 or 2 month lag, and probably over the next month or two, Fraser Valley will start to look really good, and things are going to be looking quite well. So let's take a look at two deals that we've done this year, and it gives you an idea where things are heading. So one deal that we did in Abbotsford was a home that the homeowners have lived in it for about 35 years. And the reason they reached out to us is because they didn't want to go through the route of cleaning up the home, getting it ready for showings, and listing it with a realtor. They're looking for a private sale option. And one of the services that we provide is a sell and rent back. So how exactly does that work? Well, in this particular deal, the homeowners lived in the home for about 35 years, and she wanted to sell the home and do a short-term rent back. Now, what was happening was her husband was going into a care facility. They're an older couple. He needed more long-term care. So he was going into a care facility, and she was still healthy, and but she just didn't want to have this massive house to take on because they're older. Cleaning it up and things like that and take care of a home can be a lot of work. So what we were able to do for her is she sold the home. She did a 3-month rent back, and then we lined up a condo for her to buy on the end of the 3-month term because she wanted to downsize. She wanted to have something low maintenance, and we lined up a 1-bedroom condo for her to purchase also within the Abbotsford area, close to where her husband was going into a care facility. So how exactly did this deal break down? So we got a homeowner that's lived in the home for about 35 years, a bigger home, and she sold the home to one of our investors. Our investors bought the property, did a 3-month rent back. During that 3-month period, she was able to get rid of a bunch of stuff, obviously if you live in a home for about 35 years, you accumulate a lot of stuff. And that is one of the big issues that a lot of homeowners tell us is not necessarily everyone's a hoarder, but you start to accumulate a lot of things, and they get shoved into closets, they get shoved under the bed, they get shoved into drawers and things. And it's a big headache to kind of go through all of it. But during this 3 months after she sold the property, she basically downsized, got rid of a lot of stuff, helped transition her husband into the care facility, got rid of a lot of different things, sold stuff on Facebook Marketplace, threw a lot of things away, and then got ready to move into her new condo. She, upgraded some furniture. A lot of the stuff was, outdated, just not looking very good, pretty, beat down. So she got rid of a lot of the older stuff. Now she moved into the 1-bedroom condo, and she's ecstatic. It was a nice, smooth, easy transaction for her. She got the price that she wanted on the sale. And the great thing was when she was buying the condo on the other side, because the condo market, it has been hit so bad, she was able to get a fantastic deal on the other side, buying a condo at literally below market value, because a lot of people are blowing a lot of these out right now because they bought them way too high or they bought them in pre-sale and things like that. So she got a fantastic deal on the other end for the condo. So again, just to recap what happened with this deal, we have a homeowner that wanted to do a sell and rent back. She sold the property to one of our investors. She rented it back for a 3-month period. Right after she sold the property, she had funds that hit her account, so she had cash in the bank. She used that cash to pick up a condo on the other end for a fantastic price that she lined up a few months down the road after the sale of her property completed. So she took the 3 months that she was renting the home back to basically get rid of a lot of things and line up the move into her condo that she purchased and help her husband get into the care facility. So it was a fantastic deal for the homeowner because she got exactly what she wanted, and it worked out really well. So from the homeowner standpoint, from the sell and rent back, she was ecstatic. Things worked out great. Now let's take a look at the investor side of things. Why was the investor interested in a deal like this? Why did this look good to them? Well, this is kind of how we structured the deal and why it looked great for the investor side. One, the investor was able to purchase the property at a good price because the property needed work. The homeowners, obviously being older, they didn't want to put the time, they didn't want to put the work in. They're older. They didn't want to invest a lot of time and money. So the investor saw an opportunity on that side of things where he could fix the property up, possibly sell it down the road or rent it at a premium, because if he put in the money, then he could basically get a lot better rent because it'll be a nicer property. So that was one aspect for the investor, that they're looking at the deal going, okay, this makes a lot of sense to purchase for this type of reason. Two is he didn't have to worry about tenants because you got the homeowner that's going to be renting the property back. Don't have to fill it with new tenants. They're going to be leaving, so he can have the property vacant and decide what to do with it after the 3-month period, fix it up and maybe sell it, or fix it up and rent it, depending on whatever strategy that he wanted to implement. Now, what exactly happened is, okay, so the investor bought the property at a great price, depending on where the market value was at. He bought the property at a great price. He had somebody in place that rented the property for 3 months. The rent was secured because he knew that they were selling the property and literally they had no mortgage on it because they lived in it for 35 years. They had cash in the bank. The difference between what the condo that she was purchasing and the cash he had was significant. So the rent wasn't an issue. And he got the rent for those 3 months. And then when they vacated, he was able to implement the strategy that he was looking to do. Right now, currently, he's doing a renovation still on it right now. He decided to do a significant renovation, which is a fantastic idea, especially in this marketplace, because a lot of people are looking for a turnkey great property. So it all depends on where the market's at to determine what strategy works best. But buying something, renovating it, and then perhaps either even selling it or renting it out is a fantastic strategy. And this investor particularly really wanted to do something like this, but it worked out fantastically for all parties involved. And that's why this worked so particularly well in this market segment. Now, a lot of homeowners right now are listing their property on the market, slashing prices. Like I was saying earlier, like the stats are out, so you can just look at the stats yourself and see where prices have gone. Year after year, prices have gone down. So people have been slashing the price, trying to chase the market downwards to try to get it at the right price. Now, for a deal like what we're doing is off market, it's not on the market, so it appealed definitely to a different type of segment of the market. So just to give you a little recap on both sides of the deal, we got the homeowner that was ecstatic because they wanted to sell their property and do a short-term rent back, and which they were able to accomplish because they rented it back for a 3-month period, and then picked up a property on the other end for a great bargain. From the investor standpoint, he picked up a property that was off market. He didn't have to pay a ton of transaction fees, such as like commissions and things like that. He was able to buy property that needed some significant work so he could invest into the property and get something, a return on that end of things. And now he's got the property vacant. On the other side, and most importantly, during that 3-month period, he had the homeowner that turned into a tenant, and he knew that the rent was secure because they were getting the money each month from that homeowner because they actually had cash from the proceeds of the sale. And there's no turnover. You're not looking at, okay, vetting a new tenant, making sure you're going to get the rent paid. Someone's moving in, someone's moving out, coordinating all that. All of that didn't apply in the situation because the homeowner was actually the tenant. So it worked out quite great. And then now he's got this property that he can invest some money into, fix up, sell, whatever he plans on doing. What he's doing right now is, again, renovating the property, and we'll see what he decides after the renovation is done, what he wants to do. So it works out great for both parties involved. We love doing deals like this. And this is the type of deals that if you look at Canada and what's going to really bring back the economy and doing things is getting a lot of different types of deals done, some creative types of deals done, helping people, helping homeowners get what they want, and then also helping, local real estate investors get into the marketplace and something that's a little more secure, something that, they kind of know what the upside is, they know what the risks are involved, rather than buying something blind, off like either the MLS or bidding with somebody for a property that you're not too sure what's going to kind of happen on the other end. A lot of individuals that were buying back in 21 and like around when the market peaked have lost a ton of money, and a lot are underwater. But again, it depends on the deal, who's structuring the deal, and how it kind of works. So that is deal one that we're looking at. And deal two I want to tell you about is basically a homeowner that did buy during the peak. And they bought during the peak in 2021. And they're looking to sell their property because their mortgage was up for renewal. Now, their mortgage being up for renewal, their mortgage payment jumped because in 2021, interest rates were very, very low. And now their mortgage payment is jumping up. Also, unfortunately, what happened for this particular deal and this homeowner is they bought the property at a very high price. They were in a bidding war, and that was just kind of what was happening back in 21. There was a lot of, because interest rates were so low and qualifications for mortgage were very loose, everyone could basically get a mortgage. It was a lot of people had a lot of money and they were out there trying to pick properties up. So there was a lot of bidding wars happening. And in this particular property, the price inflated very high over market value, and that was in 2021. So they overpaid on the property back in 2021. Then essentially what happened over the next few years, as many have seen, is the market came down, and the market came down significantly over the last few years. So what happened is this homeowner approached us and they wanted to sell the property. And unfortunately, we weren't able to get the deal done. Now, the reason being is for this particular reason. They bought the property by paying way too much in 2021, but they had low interest rates. So their mortgage payment was quite low from their perspective. Now their mortgage was renewing this year, and they contacted us saying, hey, we need to sell their property before our mortgage renews. And we ran the numbers on the property, and what we could offer for it was below what their actual mortgage is owing. So for example, just for numbers sake, let's say they owed $1 million and we could only offer them $900,000 on the property. But that was what the market cost was on that particular property. So our offer of $900,000 on that particular property wouldn't cover what they owed on it. And unfortunately for them, we weren't able to do the deal. And now they're trying to list the property and they're slashing their price because no one's buying it for what they want to sell it for. And most likely the case is going to be that they're going to sell it for around 900,000 and they're going to be underwater on their mortgage, which means they're going to owe the bank the difference. So if they sell it for 900 and the mortgage is $1 million, that's $100,000 difference. And what's the bank going to do in that scenario? Well, you're going to have to wait and see. Like, there's a lot of situations like that in the marketplace in terms of what's owing. So this was a deal that we weren't able to do. And unfortunately, we are seeing a ton of this right now. A lot of homeowners are approaching us saying, hey, we need to sell our property. Here it is. This is what we'd like for it. And unfortunately for us, we look at the numbers and we're like, well, we don't have somebody that would pay that much. We have somebody that might pay this much, but that doesn't cover what you owe. So it's not a situation that's going to work. And for many cases like that, like the best thing for them to do is try to either sell it through a realtor, put it on the market, whatever it may be. But a lot of individuals are underwater on their mortgages because they lost essentially almost all their down payment that they put down when they bought the properties in 21 and 22. So we're seeing a lot of that right now in terms of situations in the marketplace. And again, there's a deal that we weren't able to do because the numbers just didn't make sense. And it was a better scenario for them to either sell it on the market or try to do something different, whatever it may be, to make something happen. So with that being said, I just wanted to recover two of these deals, one that we were able to successfully do this year and why that worked well for the homeowner. The second deal is something that we weren't able to do. We had to actually pass on. We did try to structure a deal, but the numbers didn't make sense for the homeowner. The numbers really didn't make sense for us. And most importantly, the bank that lent the money to these individual homeowners wouldn't probably let the deal go through because they're going to be owed still $100,000. So who's going to be coming up with that, right? It would have to be the homeowner that's selling the property. So that's kind of where the marketplace is at right now. Just to kind of go over the theme of the podcast, which is the Great Canadian Comeback. It's looking good in terms of where the real estate market is at right now because we're kind of bottomed out on certain price points like residential detached and things like that. However, there are still a lot of people out there that need to sell, have to sell, but they can't get the price that they're looking for, and they owe more on the property than they actually have, which means like they're underwater on their mortgage, and they might just either just have to ride it out for a few more years, which is going to be difficult as well because what's happening right now is their mortgage is due and they're paying a higher interest rate. So their payments going up. So it's a tough scenario. Their payments going up monthly on their property and their value of the home has come down. So you're losing equity in the property, but you're paying more monthly to own it. So it's a tough situation for a lot of homeowners who are seeing values drop and monthly mortgage payments rise. And scenarios like this can be very difficult. Again, reaching out and trying to see who can possibly get deals like this done is one of the things that we're able to do in some scenarios, not necessarily all of them. Again, the great part about where Canada's going right now is the theme of this podcast. And sometimes you got to hit rock bottom in certain segments. And what we're seeing right now is I think we've hit rock bottom, definitely on the real estate side, especially in certain areas. So if we've hit rock bottom, it's only going to be up from there. So we've kind of stabilized in some situations, and there will be some great deals moving forward. There will be some fantastic structures that are happening kind of moving forward. So that was what this episode was about today. We wanted to discuss two important deals that are happening right now in the marketplace that kind of give you an idea of what's out there, what's capable to be done. And this kind of gives you an idea where the market is at right now, where real estate is at. And the great thing is the future does look bright, and the Great Canadian Comeback is taking place right now. And yes, it might be a lot slower than some people would like, but nevertheless, it's happening, and the future does look bright in a lot of segments of the economy. So thank you for listening to this episode. Definitely tune into a lot more. I'm going to be coming out with weekly podcasts discussing all sorts of different scenarios, things that are happening in the marketplace, news, how it's going to affect what's happening and where things are going to be heading for Canada as a whole economically, and more importantly, where are we treading to go? Are we going towards a successful win? And it really does look like we are. Thanks for listening. Thanks for listening to The Great Canadian Comeback. Follow the show for more episodes and check the links in the description for more information. We'll see you next time.